Hey, it's Michael Saul, also known as Tiny. This is the market video for the week of October 20th, 2014. So let's take a look at what happened last week. We continued with the volatility. You could see we had nice expansion bars, little pause bar here on the 14th, but even that relative to what we were seeing up there was wide. And you can see we flushed down. We broke this neckline, whatever it is. Either it's going to be a diagonal or whatever it is, an angled, head and shoulders, or it's an inverted cup and handle. But we broke through the 200-day moving average, and then the second half of the week we got a bounce, but we couldn't get back over that neckline, for lack of a better word, or that 200-day moving average. So what am I looking at here on the short term? And this video is not going to be very long, but I will be doing another video this week. So make sure if you are not on the email list at stockmarkettrendsx.com, you sign up, or obviously check the YouTube channel. But the best thing to do to know when the next video is coming out is to get on the email list. So here's what I'm looking at on the short term. I'm looking for a retest down here. Usually lows are not put in, or lows or highs are usually not put in without some sort of testing. So you can see here, after this high, there's an all-time high, then we came up, hit another all-time high, and then we came down the test, and then the small double top or the M top, and then we came down. So yeah, could this be a flush out? Could this be exhaustion, and could we be on the way higher? Yeah. But usually what will happen is we'll get a retest down, either a matching test or a high or low, or maybe even a lower low. Okay? You can see we still have this. We came just shy of this low right here at 181.31. So we're going to be watching to see if that holds on the way down. Now, if we don't do that, what I'm at least expecting is some sort of consolidation here in order for the market to make its next move. Usually it just doesn't go, like a bungee cord here, down and up and down and up. So, yeah, could we continue to see volatility? Yes, all right. But more than likely, we're going to see a draw-in of range. I said that in my Friday email that I was looking for more of a digestion day. That's exactly what we got on Friday. We still got pretty good, net change because of the gap, but the travel range got sucked in, so to speak, right, relative to what we've been seeing. So you can see we're under the moving averages. We have to respect them as potential resistance, even though we just got under them. But you can see the short term are starting, to cross down below the longer term. This is going to be much watched. People are going to be watching it for resistance. So, we have to pay attention here. I mean, on the short term, I think that day trading, if you're a day trader, I think that's where the opportunity is. I think that more than likely you would it would behoove you to stretch out your time frame, maybe use the 15-minute chart or the 60-minute chart or even the 5-minute chart if you're really a 1-minute person. I like the 1-minute chart. So, even stretching out to 3 or 5 minutes is making it longer. And of course, you're going to be risking more points or dollars. So what you have to do there in order to accommodate for that risk is lower your size. It doesn't mean you have to risk more. Just because you're risking more points doesn't mean you have to risk more money. You just have to adjust your size accordingly. But I think we're in a nice sweet spot here where we could see some nice trading ranges here, at least for a couple more weeks. Into the Thanksgiving break, which is not that far away. And then, like I always like to say, after Thanksgiving, the first week of December into Christmas, is usually really nice trading, really nice opportunity. So I would love to give an opinion that the bulls have, flown the coop here. But I'm not yet convinced that's the case. All right. The weekly chart, yes, this is the biggest dip we've seen in quite some time. But, look at this dip. Back here in 11, and you can see here, we came up, we dipped down, and then we continued up. So what I'm saying is it's not out of the question that this, first of all, it's not out of the question this could go lower, but it's also not out of the question that this could recover and the bulls could, try to put put their head down here and try to get this going. I mean, again, so 202, let's say, is the high. It's a little shy. So 202. So from 188 to 202 is, I mean, I think my math is correct, but it's 14 points. All right, and that's really, it's less than 14 points because it's 188.47, but I'm rounding down and then I'm rounding up. So let's do 188 to 202, okay? So I don't fry my brain trying to figure out exactly. So you're looking at 14 points basis the S&P here, the SPY. So that's, what is that, 8% of, or 9%, whatever, it's less than 10. All right, so it's really not out of the question that we could go back to new highs here, but the bulls have to step in. I'm not guessing that that's what's going to happen here. Right now, this is too messy. It's too messy for me to really be able to lean into, for me to really be able to come up with a really firm opinion here. So I'm not going to. All right, and that's the, that's the point. The point is that when you don't see something, stop guessing and stop forcing. And if the market needs to play itself out a little bit, then that's what it will need to do. All right, look for another email. You can see my voice is a little shot here, so I wanted to keep this one brief. Look for another video this week. Sign up for the email list. Hopefully, if I'm feeling a little better, I will go over the rest of the indexes, some stocks, and let's quick go over bonds. So bonds had the big blow off here. And I talked about that in my email this week, that it would offer a really nice shorting opportunity if you're nimble. Now it's pulling back, but I think it's going to consolidate more than just do a straight pullback and then a remount here. Gold is consolidating. See, this is the type of consolidation, right? So I mean, it doesn't look obviously like the S&P, but you see how we came down here and now we went up. Now, if the S&P is not going to retest, then maybe it wants to form some sort of consolidation like gold is going here. Gold is doing here. So what you want to do is you want to watch confirmation here to see if gold gets going and if it can go through that 50-day moving average. Crude oil looks lower to me still. Broke down. It's correcting. I think it's going to take out these April 2013 lows. Some grains. Wheat into the 50-day moving average here. Soybeans a little shy of the 50-day moving average, and corn above the 50-day, but looks like it's coming back below it. These still look like they're in pretty decent downtrends. Skip silver. Silver is consolidating, but at the lows, not like gold, which is coming off those lows. So again, you got to watch to see if they get continuation here, or if it could come up and challenge the 50-day. All right? Any questions? Tiny@stockmarkettrendsex.com. Join the email list for daily updates and to be notified when the next video is recorded. Have a great trading week. I will talk to you soon.